We're in Denver, Colorado at EnerCom's 19th annual Oil and Gas Conference. I'd like to welcome John Simon, the CEO of Bennu Oil and Gas. Hi, John.
Hi, Quinn. How you doing?
I'm great, thank you.
Good.
Last November, you completed the acquisition of ATP Oil and Gas Corporation, which was in bankruptcy. You launched a new privately held company, Bennu Oil and Gas, with those assets as your foundation. How did the deal come together?
So actually, Bennu as a company, Quinn, was formed in September of last year. And then a number of events transpired leading up to a debt offering in October of the same year through Credit Suisse, debt offering of $350 million. It was those funds that we used to help us close the transaction, which resulted in the acquisition of those assets from ATP November the 1st.
What are the assets?
So a number of Gulf of Mexico assets that were taken out of and acquired from the ATP estate. About 2/3 of them are in deep water. Another third of them or so are in the shelf. And ultimately, 8 of those leases are producing, and another 20 are still under primary term.
Today, Bennu has production, cash flow, and reserves. Tell us about your production stream.
So the production when we first took over the properties in the 1st of November of last year, Quinn, was a little over 10,000 barrels a day. In fact, we averaged the first quarter of 2014 about 10,400 barrels a day, and about 80% of that is oil. But there were a number of challenges associated with those assets, in particular a problem with an umbilical on an important asset called Clipper that impeded the ability to realize the full capacity of the well stock there. So ultimately we've been able to correct a number of those problems, address a number of those issues, and optimize production further still. And so we've recently achieved rates around 19 to 20,000 barrels a day, and again that's about 80% oil.
How will you further develop the assets, and what are your CapEx plans?
So we're fortunate, Quinn, on a number of these properties to have some opportunities, and in particular we have 2, we believe, very attractive PUD, proved undeveloped opportunities. One on Mississippi Canyon 941, also called Mirage, another one on Atwater 63, also called Telemark. And it's our intention to mature those and go drill them starting in the first quarter of next year. Those 2 PUD opportunities, probably on a back-to-back situation, utilizing a rig that will contract in the not too distant future. And our intention is to take those PUD opportunities and farm them down, go get some partners to participate in those opportunities, and utilize the inflow of funds that will result from those transactions and redeploy it into some other opportunities to diversify our portfolio, which is an important part of our strategy. So over the course of the next couple of years, we expect to spend somewhere in the neighborhood of 150 to 250 or maybe as much as 300 million in CapEx for those opportunities and others that will result from those transactions.
Do you foresee a day when Bennu will go public?
I can certainly see that being a potential outcome of Bennu's journey, but for now we're focused on delivering our business plan, creating value for our investors, and actually undertaking some of those activities that I mentioned previously, and over time then we'll start to give more serious consideration to potentially going through an IPO.
John, what other insight would you like to share with our viewers about your company?
Well, I guess the primary insight for me is we're a startup, we're a new company, Bennu is. And normally those startups take a while to get started up, but in this particular instance, through the acquisition of these assets from the ATP estate, which have good production, good cash flow, and a nice opportunity set, we've got a great starter kit, so we're off and running much more quickly than your typical startup.
Well, John, we wish you all the best of luck.
Thank you, Quinn. I appreciate it.
Thank you. I'm Quinn Nguyen for OilAndGas360.com.